Hi there, I'm Tyler Ballhorn. Welcome to the Stockscores.com weekly market analysis. On screen now we have the trading desk, the Stockscores analytics page of the trading desk, where subscribers to the Stockscores analytics email alert service can follow my alerts. And what I wanted to highlight is the area just down the page here where it says Analyze Watch List. This is where you can get my up-to-date ratings on the different indexes that I cover in this video each week, as well as my latest comment. And so if you simply click on the little icon there, you can see the comment that I have made for the Dow. Alright, let's get to the analysis. To do that, I'm going to go into the chart watch area of the trading desk, and once there I will pull up those charts that we want to take a look at. Starting off this week is a chart of the Dow, and what's important on the chart of the Dow, and again I always use the exchange traded funds to do this analysis, is that the Dow has broken its downward trend line, and it did so from a rising bottom. That put me in a bullish mood on Thursday, Friday, and I expect that this market will continue to rally higher in the weeks to come. Next chart here is the Canadian dollar chart, and it is breaking from a pennant pattern. I'm not crazy about the break that it made today because it didn't come down in volatility. Normally we would see this progress sideways for a little while longer before the breakout. The break is encouraging, but I wouldn't be surprised to see a little pullback before the Canadian dollar goes higher. Now, longer term, I do expect the Canadian dollar to go higher. Just in the short term, expect that it may stall for a little while. Next up here is a one-year chart of the gold ETF, and gold is right at its long-term upward trend line. It's do or die time right now for gold. Notice that we have falling tops over the last few weeks. I think that there's a good chance that gold will break that upward trend line, but until it makes that break, I wouldn't count gold out. It's just at a very critical point right now, and I would be cautious with gold and with gold stocks. Oil has been consolidating to the upside. We have rising bottoms on the chart. We are still under resistance on oil, but the optimism is encouraging. However, I expect that oil will get stuck here and then pull back. If we do get a breakout through resistance, then that's great, but it wouldn't be the ideal setup for oil. I think oil is more likely to spend some time going sideways in the weeks to come. Nasdaq 100, just as the Dow has done, it has also broken its downward trend line and now looks like it is likely to go higher. I expect that we will see a summer rally in the US stocks. The chart of the S&P 500 probably looks like the strongest of the three American indexes that I like to track. It has also broken that downward trend line. I am bullish. I have recently featured the SSO ETF, which is a double beta ETF for the S&P 500. I think that the S&P continues to move higher. It'll get stuck right up in there, probably pull back from there, but ultimately I think it's going to move higher from here. The TSX 60 ETF, representing the major stocks in Canada, doesn't have as strong a chart as the US markets, but it also is not coming back from the sell-off that we saw in the US markets. So the Canadian market has really been a pretty stable one over the last few months, while many markets globally have been suffering. Therefore, it doesn't have as much upside from here simply because it didn't fall as far. I do think we'll see the Canadian market rally along with the US markets, but on a percentage basis, not as dramatic as what we'll see in the US. And finally, the chart of the US dollar index. The US dollar, of course, has been very strong in the last year or so, but it broke its upward trend line some time ago and continues to break down from falling tops. I think the US dollar is probably headed into this price range here. That's not a lot more downside, but there are so many people bullish on the US dollar, I just don't see it happening. I think the US dollar actually gets weak as people realize that the world is not falling apart and they start to take their money out of safe havens like the US dollar and put them into equities. Well, that has been the Stockscores market analysis for July 27th, 2010. For more information on the tools and services offered by Stockscores, give us a visit at www.stockscores.com. Have a great week in the market and trade well.